Hello and welcome to another episode of our From the Helm series, live here at the ASX Mid-Caps Conference this September 2025. I'm Grady Wulff, Senior Market Analyst with Bell Financial Group. Cobram Estate Olives, a household name, ASX CBO, is a company that's engaged in olive farming and production and marketing of extra virgin olive oil in Australia and the US. Now today I'm thrilled to be joined by Cobram Estate's co-CEO, Sam Beaton. Sam, thanks for joining us today.
Thank you, Grady. Thanks for having me.
Cobram is a staple name in every household. It's olive oil. It's everything. We love it. Tell us about the company for any investor who may not have heard of it.
Yeah, the company was actually founded about 27 years ago by Rob McGavin and Paul Reardon. And since then, we've grown into one of the world's largest vertically integrated olive oil businesses.
Absolutely.
We're based in both Australia and in California. The biggest part of our business is still Australia. We have around 7,000 hectares of olive groves. We have 2 processing mills, storage, bottling and laboratory. And we have the number one Australian brand, Cobram Estate. We also own Red Island, our secondary brand. And in the USA, we moved to the USA around 11 years ago. We're now one of the biggest millers of olive oil in the USA. We have 1,000 hectares of groves and we're expanding rapidly over there. And importantly, our brand's going really well. So we're now the number 9 brand in the USA from an olive oil perspective in supermarkets and growing really strongly.
That's really exciting. And the US, obviously, tariff implications come in, but if you're producing there, you're kind of exempt from that, aren't you?
Yeah, it certainly gives us a cost advantage, that's for sure. I think over 95% of what's consumed in the USA is actually imported. The USA doesn't produce much olive oil, so we see that as a huge opportunity for us.
Yeah, it's a huge leadership position that you can definitely take. Now, 2025, FY25 results, underlying EBITDA is expected to be approximately 115 million, up from 66 million. Now, that's a significant jump. What's driving those tailwinds for the company?
Yeah, I think a couple of reasons. So we had a good crop in Australia and also we had really strong branded growth. It is important to understand, though, that olive groves are naturally biennial bearing. So you have a higher cropping year like we've just had, followed by a lower cropping year. We look, and under accounting standards, you have to recognise the majority of the profit in the year of harvest. So we do get up and down reported profits. For that reason, we look at our business. One of the key metrics is our 2-year rolling EBITDA. And we saw significant growth in that as well. So that was really pleasing for us.
And that's average across both a good and a higher and lower year.
Yeah, it takes into account both a high and a lower cropping year. And that was up around 75% compared to this time last year. So
that's fantastic that it is growing then. Branded sales and products in the US and Australia are rising strongly. What proportion of sales growth has come from premium versus everyday lines? And what's the revenue split there?
Yeah, it's a bit of a mix. We have an internal rule that only around 50% of our volume goes into Cobram. And the reason we do that is so we can maintain quality standards. So you know that when you're buying Cobram, you're getting the very best of our extra virgin olive oil.
We do know that.
And then the next best goes into Red Island, our secondary brand, and we also supply private label. So we're always trying to grow that whole category, and that's what we've done successfully over the last 15 years.
With recent funding, institutional placement for US expansion and ongoing investment into grove development, how do you see CapEx faring and growing over the next few years, and how are you going to combat that with margins?
Yeah, I think importantly, if I just look at Australia to start with, we've spent hundreds of millions of dollars in Australia over the last 10 years redeveloping and developing new groves, building out processing milling capacity. And we're through that growth CapEx phase as of this year. So from FY26 onwards, we move to more of a sustaining CapEx level. So the implications there that we see free cash flow continue to increase out of our Australian business. All of our growth CapEx will be focused around the US, where we're rapidly expanding production.
That's amazing, because CapEx is obviously a key metric investors look for. So that signals margin appreciation, I assume, moving forward. Yeah,
I think with an olive grove, it's important to understand that grove costs are relatively fixed across the area. So as your olive oil production increases, then your cost per litre goes down, which helps with margin. So so you front end the CapEx, which you've already done, and then you have the the tail at the back.
So you hit steady state of CapEx and then margins go up.
Correct.
Okay.
Well, our CapEx in Australia actually decreased significantly down to sustaining CapEx levels.
And seeing exactly what investors want to hear. Now, what is your timeline for the newly acquired 1,600 hectares to reach maturity, and what's the yield to ramp up look like?
Yeah, so we have 1,000 hectares planted right now. We have another 1,000 hectares that we've recently acquired that will plant out by the end of next calendar year.
Yep.
This 1,600 hectares we'll have planted by the end of 2027.
Okay.
So we've got progressively more and more oil coming online.
Fantastic.
It takes around 8 years to hit full maturity.
Yep.
So certainly a long-term investment, but importantly for us, we're increasing supply and capitalising on the demand over there.
I think demand isn't going anywhere for olive oil around the world at the moment. What risks are there for any investors looking at investing in the space? Obviously, climate, labour, any elements that you can kind of not really control, but you need to keep aware of.
Yeah, I think like most agricultural investments, certainly climate and water are risks. Our Californian groves, all of our groves have dual water source, so they've got surface or channel water, and then also underground or bore water that we use in the years of extreme drought. Yeah. From a climate perspective, where we're planting is a great area for growing olives, but obviously we're very careful in site selection and looking at little microclimates that suit olives to help mitigate that risk.
Yeah, fantastic. How long does it take once you plant the olives for the first batch to kind of grow?
Yeah, so within 2.5 years, you'll get a very small crop.
Okay.
From about year 5, you start to get what we call a commercial crop, start to make a little bit of money, and then at year 8, it's full maturity. Okay. And we work on a lifespan of around 40 years.
Wow.
The reality is olive trees will last forever.
They will, yeah. You see them in your backyard.
yeah, exactly.
Yeah, definitely. Now, you have increased prices of 15% in the US. How have consumers responded? Have they welcomed it? Have they been okay with demand?
Yeah, I think, we've seen really strong demand, and I think we actually sit from a pricing perspective below our main competitor of Californian olive oil, which is Californian Olive Ranch. Yeah. From a price perspective, but we're really excited by the prospect and the demand, and the marketing that we do over there is very similar to here. We're marketing a locally produced, high quality, extra virgin olive oil that's fresh and good for you. So they're the sort of key pillars that go behind all of our marketing to consumers, but also to retailers.
Of the 175 million raised recently, can you break down how much will go into land acquisition, irrigation, where the exact funds will be going to be spent? Yeah,
so we had funds set aside to fund the 1,000 hectares I talked about that we've already purchased, and all the infrastructure and processing capacity. So these funds will go purely to another 1,600 hectares of land. Yeah. And the development of the groves. It's about 50-50, so about half of it is the acquisition of the land, and about the other half is the planting of the trees, the irrigation infrastructure.
Absolutely. Now, looking forward, or for investors who may not understand the difference between cropping in Australia and the US, what are the key differences, and what do you see differences in the produce coming out?
Yeah, it's actually very similar. So similar varieties, similar climates where we are compared to there. So. We're seeing slightly better results from a yield point of view in the USA, but overall reasonably similar.
And for investors who might be considering an investment in Cobram Estate over the next 12 months, can you tell us about what news flow they can expect over the next 12 months?
Yeah, sure. We've got our AGM at the end of October. Yeah. So investors are certainly welcome to join that. It's a hybrid meeting, so it'll also be online. Yep. Our harvest in the USA, we commence that in mid-October, finish by the end of November, start of December. So there'll be an announcement probably early December or when we finished harvest on the USA, and then we get into the usual cycle of half-year results, and the Australian harvest comes around in April. So there's always something going on at Cobram.
Absolutely love it. Sam, thank you so much for joining us today, and what a big year ahead for Cobram as you grow in the US.
Thanks very much, Grady, and thanks for having us.
Thanks for joining us for that episode of From the Helm. I really hope you enjoyed hearing all about the olives from Cobram Estate Olives, and if you did enjoy it, please be sure to subscribe to our YouTube channel to stay up to date with all market commentary, insights, analysis, and of course, exclusive interviews just like this one.